following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's still cold in North Carolina. Cold for me. You guys in Boston, New York, I am sounding like a little wimp, I know, but it's chilly down here. It's in the 20s, and that's cold enough for me. It's all about China. All right. So we're looking at the Shanghai first and foremost. Unfair lows, 29.66. We hit a low today, or whatever today is tonight over there, what have you, 29.78, and we've come off of that. So that 3,000 level is held. That's perceived as, okay, the Chinese market's not going down. If you look at it on a relative scale, all things considered, our market obviously is broken down technically on our and I could get some more history with the continuous contract. I'm just going to focus on the current front month, and we lost our chart. Well, my goodness, what happened here? I don't even have the chart function on the DIN. I'm going to have to relog into the DIN. Sit tight, guys, for 2 seconds. This is going to take no time at all. And I'm going to be able to show you this. So let me get back in there. Oh. Al, just letting you know there is no chart functionality to show. And let's get back in here really quick. Okay. And this should do it, I hope. Back in, guys. Okay, here we go. So here's my chart of the S&P. So if you look at this in the grand scheme of things, if you guys are seeing this now, can I get a confirmation now? We good? Just making sure we see it. Okay, good, great, Russ. Thank you. Okay, so in the grand scheme of things, and I'm just going to pull up an SPY chart here. And remember, this is a little different. You're going to see some levels that are a little different here. Going back in time, I mean, the S&Ps have held up relatively well in a massive pullback on the Shanghai. So as I look at this, and I'm going to go back to my futures because that's what we look at on our show every day. Got a million things going on here, pre-market, and the bells ringing from the den. It's driving me insane. All right, here we go. Here's our futures. So we got a couple of things in our favor here. Shanghai looks like it might hold support. You got to keep an eye on that. We could retrace back up into this 53.54 bare minimum. Remember, closes below and go. A lot of times these profiles will act as magnets after they're pierced. And when I say that, we might have a revisit up bare minimum of this 53.54 area. All right. Now, that's coupled on our long term with a new profile attempting to appear. Remember these orange bars, and if we go into the scanner, I'm going to go back in here, and that ringing in the den is going to drive me completely batty. I hope it stops soon. You guys aren't hearing it. Here's our S&Ps. Here's that yellow peel back happening, right? So here's our chart out of our scanner. I'm so proud of this. We have a scheduled release for this weekend. That's etched in stone. Everybody's on the same page, and all the charts are figured out. We're actually going to make some adjustments here, by the way, so you guys can see these vertically and be able to do a little bit more resizing of the charts on your own. But, as we look at this is our 60 minute, this is our 4 hour. Guess what? 57, top of our profile, that we could explore the entire fair auction on our 240. That is coupled with Our weekly unfair low around 53.54. So you got some resistance up there. There's no question about it. But you've got some targets, and that's the cool thing. You've also got a new profile attempting to appear, which means a new demand area happening on the ES. And you also have, I don't want to get you guys too excited about getting long because anything can happen. Remember that. You've also got pre-market. You got stocks opening, and our odometers up here are reacting pre-market. So you got the 60-minute possibly starting to cross here. I guess what I'm trying to say is I wouldn't be short down here. We've had our long-term, our daily profiles go into the 75 range and turn back south. That's an overextension that's starting to roll over. All right, so got some things in your favor here on the long side. You got some targets up top. You got the Shanghai kind of possibly just settling out down here. And remember, we bought our treasuries for 6 or 7 years. It's okay for them to buy their own stock market for a couple of months, if you know what I mean. I mean, yeah, as wrong as that probably is conceptually, when causing a rigged marketplace, you can't fight things like that, as we know, i.e. the U.S. Treasuries edging higher and the market's loving that type of thing. And we did it. We enabled everybody else to think on that level. So just going to get away from that. But you've got some things in your favor here, just based on that alone. Now, how have some of the other indices in the globe reacted to this? Let's just take a look at the where are we at? Okay, I'm sorry. This is the FTSE. And again, we broke down on this thing. There's no question about that. But you kind of found some support here on the FTSE. Similarly, the DAX. I'm going to pull that up. Got a new demand area happening here. You've got some targets on a relative scale about the same principle and situation as the S&Ps. 10,209. It's going to be some resistance on the DAX. The Treasuries. Again, this has been something that's not been as violent as a reaction that you would generally think would happen in a situation like this, a big market sell-off. We've come up into this 27.14 and we've rattled around, and now we're getting back down below it. So I'm not opposed to shorting Treasuries. We've talked about that. I've changed tone a little bit finally after years. 27.14 stops above. I think you got some chances for this to easily revisit 126.23 and even lower down into 126. So that's the situation on the Shanghai, the FTSE, the DAX, the S&Ps. A little bit about the notes there. Let's see what else here. Gold. I've been a huge fan of using this 1104 area. Remember, gold's going to be volatile. It's going to overshoot inflection points a lot of time. And on these long-term inflection points, you've got to give yourself some room, noise areas. So we've come off 1104, and we're going to talk about gold a little bit more when we come back, and hit silver really quick. Then we're going to get into some stocks that may have been showing strength to mitigate the risk if you're going to try to buy some instruments right now. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I was just checking out some currencies there on the charts we have. We're trying to finish up with gold now. 1104, a big number. Talked about not buying that breakout and any closes above there and any action above there, just waiting for it to traverse back down below 1104, and that's kind of been a decent little situation here. Where are your targets down below? I really, truly believe we're going to revisit 1060, not in one day, of course, but here's the situation. Remember, this is our daily. Long-term takes precedence over intermediate and over short-term. So right now, you're kind of in no man's land now. You've got 1089, middle of a profile that's not exactly that wide, POC. That 1090 area is a big area. So any retracements back up into 1090, if you remember that big number, 1090, if you're looking to day trade, that's going to be something to, I'm going to be looking forward to leaning on the short side. Right now, gold, just any type of hints of strength in the market or any type of settling atmosphere, if you will, fundamentally, gold just seems to kind of traipse off again. It's just not the instrument du jour, if you know what I mean. And silver, we talked about this being a relatively weak metal. All things considered, this thing has got issues, which is kind of really unbelievable, but it is what it is. You cannot try to make sense too much sometimes out of, whether things are too low or too high or whether they actually make sense. It is what it is. And Larry and Basil will tell you, Steve Rhodes will tell you, David White, Andy Hecht, everybody will tell you things in the futures world, in the commodities world, can get really whacked out sometimes, and they don't have to make sense. It's just people get on the wrong side of a trade and they have to cover. All right. And in my opinion, with some other things factored in, this is one of those situations in silver. It is showing its hand constantly, and it is what it is. So we're going to take a look at March beans really quick. This is something that's been kind of like a death of 1,000 paper cuts here. It 864 is the new resistance area on this. getting below 854 is going to be just an incredibly damning event for this particular instrument. And we could have this thing's just, I don't look at this as a basing action. I look at it as consolidation down on lows, and we may have a washout to get some people, the last folks out of this thing before we turn around. So that's the situation on these March beans. God, man, I cannot believe you can buy a bushel of wheat for what you can buy a loaf of bread at Whole Foods. It is unbelievable. I never thought wheat would be below $5 again, but this thing could actually even go lower. Don't think it can't, based on the same principle. We're going to take a look at crude oil. Now, this is something we got down into the $30 area, $30 neighborhood. This is our weekly. We've been pounding the desk about selling breakdowns below 36.82 again, and now we're $5 lower, amazingly so in 1 week. And here's our daily. There's no new profiles attempting to appear. This is a super ugly situation. If you guys are day trading, you've got a resistance area again at 32.08. This is our 240. I'm going to go into the scanner. I show the visuals off the charts, off the eSignal platform that I have, but I can easily go into here, 32 straight bars down, and I can go into my charts now, as you can, and look at the 4 hour. There's that unfair high, 32.84. I want to point over here because I can't. Right over there. Well, let's go here and let's go over here. Well, there's the back on it. There's the 32.84. So that's our short-term resistance for guys who are trading on a short-term basis. All righty. We're going to hit some currencies really quick before we get into some stocks. Euro, believe it or not, I'm gonna get to my dollar really quick. Let's go back to our futures section. Let's hit the dollar first. And here's our dollar down here. All right. So as you can see, green across the board, except for our weekly. We're not up on that yet. So here's our daily. Here's that. Oh, man, let me fix this really quick here. There's our unfair highs on the 60, 98, 95. Let me go back to my e-signal for just 2 seconds on this one. And let me get back to the dollar. Just want to show you something on the e-signal charts here. So that 98.04, 98.30, we talked about that DMZ being support for this thing. And the targets, again, are around 99.37. We haven't gotten there yet. But, again, I mean, looks very, very strong and supportive in my opinion. So that being said, we're going to go back to the euro really quick with that kind of 30-some% inverse relationship for the most part. Let me go to the euro. Get my euro up. And here we go. So as you can see, just looking at our sell grid here, we're at the bottom of a profile, 108.99. Let's just call it 109. This has been the big number. We're sitting right below there. As you can see, it's red. It's flashing. This is that neighborhood noise area. And as we look at this, this is our weekly. Here's our 1 hour. Let me go back to that. So as we look at this, you know, is it reacting on the downside as well as the dollar's going upside? Not exactly. That's a little concerning, but I'm still not a fan of buying the euro. I'd much rather be long the dollar than short the euro, but 109 is going to be the big number. You can orient stops around to be short the euro right now. I'm not a big fan of being long the euro ever, to be honest with you. All right. This ruble is just incredibly weak. Price of crude oil just decimates their economy, therefore repricing itself. This is our ruble again. We're up here in the nosebleed section at this stage on the ruble, and I don't see any end in sight in this. If you guys want to trade the ruble USD, there's a lot of cool. When I went to that emerging markets forex conference up in London, over in London, I guess it could be considered up in London. There's a lot of cool platforms out there now to trade emerging market forex pairs. You should look around. There's some interest. Let me actually give you one here just so you can kind of explore it. Okay, where is it at? It's called R5. Go look up R5. It's a little platform that's come out. Their focus is entirely on, I would call them, not well-traveled pairs. I think you can trade the ruble in there right now, but they've got market makers now piling into some of these historically illiquid pairs. And those, in my opinion, that's going to be a little bit of the Wild Wild West for a while. A lot of volatility. Spreads are kind of wide still, but there's a little bit more liquidity in those markets. Go check them out sometime. Do a little research on it. It might be something interesting to look into. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. What I did, uptrend support, I hit my custom sort on my scanner, and I want to, okay, since we might be in a little bit of a bounce mode here, anything can happen. Remember that. Make sure you put your stops in as usual. But when I pull up uptrend support, I'm looking for things that have kind of like been kind of in a decent uptrend and pulling back to support, possibly relative to profile. So what we have I want to find things that are, well, I'm looking at Estee Lauder. I'm looking at Prologix, PLD. There's a communications company in the Philippines called PLDT. PLD. Also looking at LB. And I'm looking at these because, I'm looking at ones that are a little bit more attractive than looking at some of these red cells here. And after a while, you'll be able to read these things really quick. So this is a custom sort. PLD, LB. Let's just look at those two. LB. Oh, there's PLD. There's PLD. There's PLD. Good Lord. So here's the situation on PLDs. Held up relatively well, but the reason it's on the radar screen is because we've come back into this daily support. We've kind of really hung in there. We talked about this the other day. 40.95. The cool thing is stops below. May have a little bit of a ride back up into 42.85 if we get any type of market bounce. Let's take a look at LB. Russ, I'll answer that question in just a bit here. So here's a really cool trade, in my opinion. LB, we pulled back in. This is our weekly. This is a long term, and I like this type of situation a lot. 92.95 sitting here, support, stops below. Could get a little bit of a pop, and that will be nice, especially you guys who are, we're talking about a pop up into 95.5, maybe a little bit higher, and it should go higher if the market lurches forward at all. Theoretically, strong stock in a weak market, weak stocks in a strong market. We want to try to play that game. It's a relatively safe game to play. In that type of scenario, you're not going to be able to short these high flyers, which are extremely risky, and not going to be able to buy things way in the hole. There's some upside to doing those types of things, but this relative strength, relative weakness game is a nice way to go. And when you're talking about buying a bounce here, maybe around 93 and getting a pop up into 95.5, whatever, you do the math. That's I should be able to do the math too. That's what, 5%, 3, 4, 5% move possibly with a relatively safe downside. Let's go into the scanner again. Let's just look at stocks that have been in a strong uptrend in the face of all this stuff that's going on. Walmart stores still hanging in there. Let's take a look at that. Let's just, this had a little bit of a pullback the other day, but let's take a look at this one. Again, we're up this morning trading 64.85. So again, these are things you can kind of hide in, and these are stocks that have really been hanging in there. And theoretically, if the market starts moving north, these are the stocks that should move north. And if the market continues to pull back, these are ones that won't be as painful. All right, that's the type of really simple scenario that we're talking about. Let's take a look at let's get out of this ultra strong. Let's just look at strong uptrend. Or no, where are we at here? Uptrend. So here's a custom sort that just puts some things on your radar screen that are holding up in either these. This is a long-term filter. Things that are just Dollar Tree. We've talked about that. FLIR Systems. Let's see what else has been one here. Well, Walmart's in that one too. So Harris Corp. These are all things that are easy to hide in on the long side. Let me do this. Let me get out. I'm sorry, I can't figure out how to run my own scanner here. So as we see this morning, some stocks are opening. The short-term breath is turning positive. Let me go back to the S&Ps really quick. And let me restate this for some guys joining us late. We talked about Russ, to answer your question, new profile attempting to appear. This doesn't have to stay in force. All right, we should have a new profile that will be emitted possibly tomorrow. But this is an indication of a new demand area being put in, which will give you some new inflection points to lean on. And that's, in my opinion, an indicator in itself. And remember, we've got those targets up top, 53, 54, 57, up in that range. I was listening to Tom yesterday. He was talking about the 53, 54 area, too, as targets up top on any type of retracement. So that's, again, the lofty aspirations on the upside right now. And if we get a weekly close back up in the balanced area in the long term, that's going to be pretty significant. All righty. We're going to go look at really quick. I want to look at Alcoa. This is something, again, It's got dollar problems. It's got broad commodity problems, and this is something that we talked about religiously on our weekly. This is our daily. Let me go to our weekly. I'm sorry. Okay, so we talked about selling breakdowns and then retracements back up in 848. It's sitting on the lows. It's been a relatively weak stock in a market that at best has gone sideways, but this is not the one to try to pick up on sale, guys. Had a little bit of news yesterday. Don't look at this as something on sale. Things on their lows go lower, and we need some technical reasons to start buying this, i.e., just like we have the S&Ps putting in a new demand area, this is not showing anything like that whatsoever. So, it can go to – the worst thing is you can lose 8 points. It can go to 0. But, again, I think you've got better longs out there. Want to take a look at Apple really quick? Just reading the DIN here. All right. So we're basically back up to 100 pre-market on this. We had a new demand area. See, this is one that's going to put in a new profile today because we locked in an orange bar on the close. And if you go into the scanner, there's Apple with that orange peelback, yellow peelback that started happening yesterday. That was an indication in itself. And again, this print on this daily bar is not showing pre-market on our eSignal platform, but the shorter term time frames are. So this is what's going on in Apple pre-market. We're back up to 100. I think the waiting game right now is to wait for this to retrace back up into the 104.5, 105, 106 area, and then whack it again on the short side. I think we could have this thing retrace back up into that general area. Why is that 104.5, 106.5? That's those daily infra lows and weekly infra lows. And I'm not convinced that Apple's just going to all of a sudden go back to 112.5, which is that POC on the weekly. I think you got to be able to take a shot again on a retracement back up into some former inflection points that were important on the breakdown on the long term. We've been bearish Apple for a while, and this is kind of a wait and see for a retracement back up. NASDAQ, somebody's asking about the NASDAQ. We're going to hit that really quick. I hear the music. We're going to come back after break and talk about the NASDAQ. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. I'm showing RSG really quick before we get into the NASDAQ. This is a real-time chart on this stock instrument. See, that's the kind of thing that's driving me insane. We're still working on. What I did to pull this up is I just wanted to see things that were hanging around the top of their profiles on the weekly and daily that could get a really nice pop on an up kind of move in the market. So RSG is sitting here, and here's kind of what the drill is on where we're at on the daily and the weekly. Come on, there we go. No mystery. That's been a strong stock in a down market without question. So let's go back. Oh my goodness. Make sure we got our chart here. Okay, NASDAQ. I'm confused as usual. Going into our NASDAQ here. Okay, so let me actually do this on the scanner. So, got the yellow peel back happening here on the daily. I'm going to go into my charts, and I'm going to go to our 4 hours. So, eerily similar, the level of resistance, 4370 on the NASDAQ. That's going to be your targets, but that's going to be kind of like in similar fashion, that 53, 54, 57 area on the S&P. So that's kind of what we're looking at here. We've got a new demand area happening on NASDAQ. So all things considered, we're looking at a situation where you're probably not going to want to be short the NASDAQ right now, and wait patiently until that thing rises into that general area that we just spoke of. Now I'm going to keep my eye on these odometers up here. We've got a long ways to go to even start looking like the breadth is turning positive on our long term. But remember, we've gotten really overextended on the breadth in an area that's 75 recently. We're kind of coming off that area. This is our S&P. I'm going to go to our NASDAQ really quick. Why am I having problems here? What's going on? Oh, I know what I can do. There we go. So I'm going to access my NASDAQ breadth. Similar situation. We're going to take a look at now XLE stocks. As you'll notice, XLE is starting to kind of climb on the board here, which is really wild. I'm going to look at our chart really quick. I'm sorry I'm bouncing back and forth all over the place here, guys. So the XLE, crude oil was, again, kind of turned the wrench the same way. Look for areas to short until we're told differently. That 3208 on the front month contract on crude oil. We got a little bit of ways to go there. So the XLE, let me see where we're at pre-market here. 55.45. This is a a sector that obviously has gone straight south along with crude oil here, but any retracements back up right now, you've got a big number around 59.43, 59.90. Short term, you got 56.94. So those are the targets on the short term and the long term. But if we go to the XLE sector, we can find stocks, again, talking about that relative strength trading game. RRC, let's take a look at that one. And here we go. This is one, again, you remember SWN? Similar situation here, folks. You've got unfair highs. Let me try to repost my chart. RRC, similar situation as SWN before it popped. You got a stock that's just gotten crushed. And you're kind of hanging around these unfair highs here around 25.42. So any type of pops above there, and if crude oil rallies especially, you may get a nice little ride up into this, up with this stock up into the $30 area. Here's our daily. We started showing some hints already and some supports off our current profiles off RRC. Put this one on your radar screen. And again, the relative strength trading process here. Let me see what's going on. Okay. The SWN, again, sitting at the top of our profile. Let's look at this one. This is our weekly. This is a pretty low-risk trade, SWN, to play around with. I mean, crude oil has just gotten crushed, guys, and this thing's just hanging in there, hanging around, just like RRC, 654. These are the type, and this is, man, $6 stock sitting right around here at this support area in the weekly and the daily unfair lows. You can get all this in the scanner. Let's go back into SWN. There's that top. Here's the levels. There's that 654. There's that 641. Any type of reversing crude oil, and I'm not saying crude oil is going to reverse, but this is, you want to kind of hide in situations like this. Be proactive if you can. All right, so let's take a look also at Cabot Oil, COG. I'm just going to look at this. All right, so again, crude oil making new lows. A lot of these stocks are not making new lows. This is one, 1575. Can kind of put a stake in the ground there on the stop situation. 1556. You've got some support down here. It might be a chance to make a couple of points in this stock back up into 1737. What is that? To about 10% move could happen relatively quick in this particular stock. And if we start closing above 1737, we might have some serious legs. There's a hole in the marketplace up here. And these are the stocks you might get the most bang for your buck in any type of reversal in crude oil. Let me read the DIN here. All righty, let's see. All right. I want to take a look at a couple of Dow stocks of interest. I'm not going to pull up IBM. We're going to pull up JP Morgan. All right, so first we're going to reference the XLF really quick. Remember, the XLF is on support now long-term. Was at 21.93, let's just call it 22. This morning, we're at 22.39. So you've got some targets on the XLF up north at 23.40 for starters. But again, I'm not a big fan of these treasuries continuing to go north. So any pullbacks, higher rates, these bank stocks like that. So if you're looking at the XLF, you finally had a chance on a pullback into support on this. Did we lose the chart again? We're okay, right? Okay. So that's the situation on the XLF. So going back to JP Morgan, playing the relative strength trading game. This is again, something you can only get long now above 59.22, and that's where you're going to orient the stops. You got 59.57 pre-market, so that's the way we're looking at JP Morgan. Remember, they like a wider yield curve. Rates go up. These stocks are generally going to be happy. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome to the show. Canadian dollar, again, man, just dollar strong. Canadian dollar gets weak. I think we're trading about what are we trading at right now? 142 and some change. We've been talking about things on their highs go higher. This has showed the relative, strength on the chart, but relative weakness, the devaluation of the Canadian dollar. Dollar rallies, Canadian dollar gets weaker, or rallies on the chart. Dollar goes sideways, Canadian dollar goes sideways at best, at worst, Dollar goes down, Canadian dollar goes sideways. This is still, again, crude oil related. Crude oil pops, we may get a little reversal here, but again, this has been a nice ride in the Canadian dollar. I want to go into the XLF really quick, and this is how simple it is. I'm going into this sector. I'm looking at rates might climb a little bit here. These are the type of, so we're looking at situations, again, that are showing themselves relatively strong. So again, WellCare, HCN, Guess what else is on here? Here's that. I'm looking at, above profiles in the weekly coming down into support, that PLD. Nice little trade there. There was another one up here. WellCare. Let's see what else. Okay, so I like this one. Uptrend sitting at the bottom. EQR. There was another one here. I just looked at a while ago. Where is it at? BXP, Boston Properties. Again, arrow up, long-term trend still in force. Coming back down to the bottom of the box. Let's look at BXP really quick. Here it is. Here's our weekly. Again, relative strength. And again, coming down into those unfair lows, 121.57, showing some strength already. This morning, 122.68. Could get a nice little pop up into 125.58. And crossing the border on our weekly again in the midst of all this crap that's going on. Could get a nice ride on this. And again, we're always looking for things that'll be as least painful as possible if we're wrong. That's the theory here. All right. All righty. Let's go back into our scanner. And we're going to hit our futures again. We're going to look at this really quick for you guys into the show. About a minute and a half left. Here's our S&Ps. Again, putting a stake in the ground. New profile. More than likely going to appear here. Here's our charts. I can't believe that. They just flipped out. That's why we haven't released this, guys. Damn it. This weekend. Sorry about that. Here we go. So I'm going to revisit gold really quick. Just for you guys joining us late. Again, something 1090 is your new resistance on this to continue to sell this thing. That's our POC here on the weekly. Don't see a lot of reasons for gold to rally. We've been looking for areas to sell. 1104, getting back down below that border was an important thing. Silver, as you know, the drill there. Nothing to play around with on the long side. Looking for resistance to sell. Let's take a look at the NASDAQ really quick. We're looking at 4370 as targets up top to look at it reselling again on the NASDAQ. But again, nothing to really hang your hat on until that happens. Kind of in no man's land right now. Treasuries. New supply areas possibly will happen here on the 10-year. I'm looking for this to head lower. And what else were we going to cover? Okay, crude oil, just to give you a heads up here. All right, we looked at this 3208. I want you to see how this acts. We've met the target up here to sell again, 3208. We're there. Stops above. Again, the 240 is the regulation of this trade down until we're told differently. All right, guys, stay tuned for Larry. He's next. We'll thoroughly enjoy it. Back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.